Welcome back. I'm Pratap here. Today is 1st February 2024. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. And all these training videos are available in a playlist. I have provided a link to the playlist in this YouTube video description. And also, I have provided the link to our NeoStock Telegram group that is also available in this YouTube video description. Now let us get into our analysis discussion. Even before that, I would like to make an announcement. From today onwards, I am splitting all the reports into different videos. I want to make this analysis part in a separate video and stocks near demand and supply zones in a separate video and bullish trade setup and bearish trade setup for WIT and MIT, that is a monthly income trade and a weekly income trade, in a separate video. And also I will be posting a separate video at the end of the week for all the weekly reports and the end of the month for all the monthly related reports, so that it will be useful to you. Whoever is having interest on a specific part, you can refer only those videos. At the same time, it is also an advantage for me, because if I combine everything in one video, YouTube is taking a lot of time for uploading, and shorter videos it is uploading quickly, but long videos it is taking a very long time for processing. So that is the reason why this is also going to be helpful to me. And also please understand, we have completed the month January. So now the January report is available for our high liquidity trades from daily time frame and 75 minutes time frame. So let me show you the report I have summarized. So total we have generated 49 high liquidity zones. It's not the generated, it is the executed. So total 49 high liquidity trades are executed during this month. Out of these 49, successful trades are 42 and stopped out trades, we should not say failed trades, they are the stopped out trades, they are 7. That means it is having a success percent for about 86%. That is what the main goal of identifying these high liquidity zones is. At least we should get 80% success rate. So during the month of January, we got 86% success rate. And the total profit we got from all these 49 stocks, including profits and losses, if you combine, we got a profit of 5,21,746 rupees profit as per one future lot for each trade. If you brought two lots, maybe your profit would have been doubled. But our calculation part is as per one future lot. Assume all these 49 trades that are executed, you have invested your money. If that is the case, this is the total profit as per one future slot. But this value will increase depending on the number of stocks you are buying. And the total ROI, return on the investment, as per one future lot, for all these trades in the month of January is 320.29%. That means for your investment, if you would have placed your money in all these stocks, 320 times return it has given. The average intraday ROI in January is 6.53%. This is the total ROI. and 6.53 is the average ROI. So in general, our average ROI is 6.1%, but in January, it is slightly better than our average ROI. Because of this 6.53, the average ROI of all the stocks, starting from the month October onwards, we've been monitoring, is also improved to 6.2%. Supposed to be 6.1, but that is improved to 6.2. But even though we will consider 6.1 only our average ROI for our daily comparison point of view. And another interesting point is the average P by L in January. Whatever you got 5 lakhs, the average, if you consider for all these 49 trades, it is around 10,648 each trade, the profit average. So these are the statistics. But here, one important point you have to observe. Before you observe that, let me tell you, because this is the time to tell you the reason behind in developing these high liquidity zones and supply demand zone price action, this entire strategy builder, all these concepts, mainly high liquidity zones. The main goal is that we have two reasons. Reason number one, the high liquidity zone should give maximum profits with less failure. That is what our success rate should be, more than 80%. That is one objective. And the second objective is my investment should be doubled within a month period. If I invest 50 lakhs, the 50 lakhs should become 1 crore within a month. This was the objective. Why I didn't discuss this point all these days, especially the second point? The reason is when I talk about this point, I know people will laugh at me. When people stop laughing, if I show you the data, if it is 1 month data, people may think, maybe luckily we got. If it is a 2-month data, probably people will not really believe, probably they will be started thinking, how continuously 2 months, each month, how he is able to double his investments within a month. If I am having 3 months data, people will get confidence and also people will started believing. If it is a 4-month data, they will also having good confidence. That's why data is very, very important. That is the reason why I am collecting the data. Not only I am collecting the data separately, but every proof is there in our YouTube videos itself. Why I am analyzing the high liquidity zones every day after the trading hours? Why I am measuring how many are success, how many are failed? Because it is a proof. Of course, there is a main reason, second reason. What I want to tell you is whatever the analysis I am doing, post-mortem analysis after market hours, after trading, is you will also learn from my experience. How I am fine-tuning the zones. What are all the different concepts I am using for the trading purpose. So such kind of knowledge will help you. This is purely educational related. And also remember, all these statistics are based on the data we are measuring. It's not about how much profit I got or how much profit you got. That is not about this. Based on this data, did I achieve my goal or not? But did I really trade all these stocks or not? That is a different story. That is purely personal to me. And if you are trading, that is also purely personal to you. But based on this data, is my objective is achieved or not? That is the most important thing. So further, let me show you what is the average lot size for all these trades. Average lot size. Because some stocks are having a lot size around 1.5 lakh. Some are having around 1.2 lakh. Some are having close to 1 lakh. Some are having 1.8 lakh. Some are having 2 lakhs. Few stocks are having even 2.5 lakhs or even 3 lakhs. Few stocks. That is what we have seen when we are discussing about the trades. Based on the ROA also we understood. But for all these 49 stocks, what is the average lot cost? Average lot cost, not each, average. Because based on that only we will be able to identify whether we really able to double the money or not within a month. For that, let me calculate the average cost of the lot for all these 49 trades, average. How we will calculate? Based on this average ROI and based on this average profit or loss we got. See, this 6.53 is the average how we got for one future slot. So that is the reason why for 100 you got the 6.53. But what about 10,000? So, sorry, 10,648 into 6.53 divided by 100. Something wrong in the calculation. Ten thousand six 48 into 100 divided by 6.53. So this is the formula. This 10,648 into 100 divided by 6.53. So that means 1,63,062. Say approximately 1,63,000. So your average cost is 1,63,000, the lot size. Of course, some lots are above this value, some cost of some lots are below this value. But this is the average value for all these 49 trades. How we calculated? Based on this average P by L and also average intraday during January. Based on these two values, we have calculated the average cost of the future slot, one future slot is. Okay, but what is the total profit you got? This is your investment. But what is your total cost? So this is what your total, 5 lakhs. Is it doubled? Yes, it is even 2 times. But here we have a problem. What is the problem? Do you really trade everything? You have 3 trades triggered today, but do you buy all the 3? If you buy all the 3, then you have to invest 1,63,000 3 times. That means our calculations will be wrong. That is the reason why what you have to do, this 5,21,746, whatever the value is there, the average value is coming around 2.2 something. The average trades. But I am considered 3 at the maximum level I am seeing. The worst case. I am considering the worst case, not the best case. Worst case also, is it doubled or not? So that's why what I did, this 5,21,746 profit divided by 3. Divided by 3 means out of 49, I am taking only 1/3 of these 49 trades. Let me show you. 49 divided by 3. So you are taking only 16 trades. When you are taking 16 trades, in this total profit divided by 3 you have to do. This is the worst case. Worst case, within a month, out of these 49 trades, assume you traded only 16 trades. For these 16 trades, what is the profit you got? 1,73,915. This is the profit end of the month. What is your investment? 1,63,000. What is the profit you got? 1,73,000. Say for example, 73 or 74. Even you got double the money plus again another 10,000 rupees extra profit. Okay, forget about that extra. So is our amount is doubled or not? Even after reducing your total number of trades by 3 times. Why 3 times? Some days you will be getting 3 trades. Out of 3 you are taking one trade. Sometimes 4 trades are getting executed, but you are trading only one. Sometimes only one trade is getting executed, that trade only you are taking. That is the way if you calculate the average during the January, you get around 2.2 something. Total trades, average. But instead of divided by 2, I made even the worst condition divided by 3. Even in worst case, your revenues are doubled. Best case, definitely you would have got around 2.5 lakhs, something like that. You would have got the profit. That means you would have got maybe 1.5 times, 1.5 times profit you got in the best case. This is the least case. This is the least case, whatever the number. Even in least case also, your total your investment is doubled. So you have invested 1,63,000. Apart from your investment, you also got another profit of 1,73,915 rupees profit you got. Apart from your investment. Because this is the profit we are calculating. Apart from your capital. So that means our goal is achieved. Same thing happened in the month December. Same thing happened in the month November. October data is very less. The reason is October we haven't included 75 minutes high liquidity zones. In the month of October, we used only daily high liquidity zones. Even then, the value divided by 2 I used there, probably that also came very close to double. And in the month of October, not October, in the month of November, from 15th November onwards, we included 75 minute zones. Even then, that 15 days is enough for us to reach this figure, to double the, and December it is doubled, January also doubled. Worst case scenario in December, January, even in November also, worst case scenario, our amount is doubled. See, 1 month, okay, maybe some luckily we can say 2 months, 3 months, 4 months. So that's why that is the way I am believing by seeing this 4 months sample data, I am believing whatever the goal I set, I have achieved that goal. What is the goal? I want my investment should be doubled. At least it should be doubled. Even more than doubled, I will be happy, more happy. But at least doubled. That is the goal. That is the goal behind in identifying the high liquidity zones. That is the reason why always I am focusing on the high liquidity zone. Some people are thinking why I am not focusing on the other stocks. My answer is simple. When something is giving me more profits, why should I look for something else that is not giving that much profit? The high liquidity zone itself is a special concept. The reason behind I looked into this concept is I want more profits. And more profits in short period. I mean quickly I want profits. High liquidity zones are giving quick profits and more profits. See, quickly I am getting and also I am getting more. When I have such an advantage, why should I look into the other concepts? Simple logic. When I have two choices, one is advantage choice and another one is disadvantage choice. When I am having the advantage choice, why should I look for disadvantage choice? Does it make any sense if somebody is asking, why can't you look into the disadvantage choice? That is really funny, right? That is what, when some people are asking me why I am looking only on the high liquidity zones, obviously it is a fun question for me. When I develop something that gives me more profits and also I get those profits quickly, why should I look for the some other concept? If this concept fail, then I look for some other concept. When I developed a successful concept, obviously I have to focus on that successful concept only. When I am having more power, why should I look into the less power concept? That is the simple logic. That's it. When it is giving me a lot of money, why should I look for a concept that gives a small amount of money? That is the point always I tell to the people when someone asks this question. I'm not talking about you guys, but some of my other friends and all, they are, when I've been discussing about this, they talk about this particular question. Even if any one of you are having this question in your mind, maybe you didn't ask so far. In case if any one of you having this question in the mind, same answer, whatever I told you. Hope you got the clarity. Anyway, you can also calculate all these things. I will be posting the Excel sheet in our Telegram channel after posting this video. You can refer the Excel sheet because in the Excel sheet we have all the details in which day the report is generated, in which YouTube video we discussed about that stock, how much profit the stock has given, what is the ROA, all the details I have provided in the Excel sheet. I've been updating the Excel sheet at the end of the month. So exactly the same way, even today also I will be updating the Excel sheet after I post this video. Now let us get into high liquidity zones generated in our yesterday's report and let us understand. Yesterday we have identified 4 high liquidity zones. The first one is Bata India. This is a high liquidity supply zone and prices did not enter into this zone today, and also this zone will be violated. Once prices enter, the zone will be violated easily. The reason is the structure is not good. Let me show you. The 75-minute structure is okay, and look into the 15-minute structure. It's not at all convincing. See the base candles, all these base candles within the zone. Even if you want to consider this is a leg candle, 1, 2, 3, 4, 5 candles, and if you want to draw a 15-minute zone like this, still the risk is, see the risk. Almost it is occupying the 75-minute zone depth, the 15 minutes. Even then, the 5 minutes, if you go to again, 5 minutes, you won't find any clarity within that zone. If you consider this is a drop and the base candle, see again the drop candle. The structure is not at all a convincing structure. And moreover, legout should come out of this zone. So that is the reason why I'm not at all comfortable with this price structure. So I just left this. Don't want to take a trade in this. Look for some other stock. Why should I look for this stock when I have some doubts? So that way I left Bata India. Anyway, prices also did not enter into this. Even if they enter, I would not have taken a trade. Next one is Burger Paints. This is again a daily high liquidity zone. Here we have 2 75-minute zones. But they are not very clear here. See here, drop, base, drop. Do we really need to consider this as a, maybe it could be base candles, 1, 2, 3, 4, drop, base, drop. So that way I have drawn a zone, 75-minute zone. But inside this 75-minute zone, the multiple 15-minute zones are there. So let me go to the 15 minutes time frame. See here all these candles. But if you draw like this, a lot of order flow is there in this area. This is a 5 minutes candle. Why prices are entering? Is there any? Maybe sometimes it could be a high liquidity area. Why it is not breaking? With that intention I have drawn, but a lot of consolidation is happening here. Something I am not really comfortable. But this one, if you look into 5 minutes, you will understand more base candles. That's why 5 minutes level I didn't fine tune that. See here all these base candles, 1, 2, 3, 4, 5, 6, 7, all these are all. So that's why this zone will be easily violated. Just I want to show it to you. That's why I have drawn. Otherwise, we don't look into this. If at all, anything, we have a rally, we have two base candles and a drop candle. See here, this is keep on testing. But even though it is keep on testing, why I have some doubts about this zone is, after testing, price should come down. When the order flow is very strong, prices should go down. That is not happening. Prices are moving within this area only. Maybe you may argue, maybe just below this, the demand is very strong, it is trying to push, but your supply is very strong, it is holding. Maybe institutions keep on adding liquidity into this. That's why it is able to hold. That may you may argue. But anyway, I didn't feel some comfortness in this. At least one another test would have happened. Rejections with rejections, I would have considered. But I am having some doubts in this mind. And also I am not convincing it is a high liquidity zone. So that's why not really. When some doubts are there in the mind, don't take. Why should we take a trade in this zone? See, when you finally the time when you want to take a trade, it should be very convincing. There should not be any doubts in our mind. And next one is Dalmia Bharat, and this is a 75-minute zone, demand zone. First, let me show you. We have a rally, base rally, and already tested once. And during the test, it created again a new zone. Drop, base, rally. 15 minutes. But look into the 5 minutes. See the structure here again. See this entire candle. Do we need to consider as a base candle, or again it is a ERC candle, failed ERC candle? Something doubtful here. Even then 1, 2, 3, 4, 5, 6. Should we consider this is a small candles only? Small candles. Maybe this could be a ERC candle. 1, 2, 3, 4, 5, 6, 7, 8, 9 base candles in this area. So that's why I'm having some doubts about even this zone. But the only thing, favorable thing is, see the rejections before the zone. That means some strong order flow is here. That is the only one way we should be favorable to this. But the order flow really there until this zone area, again it's a question mark. Anyway, prices did not come into this zone today. And the next one is GNFC. It is a perfect zone. and also perfect trade we got. It is a 75-minute zone. We have a rally, 3 base candles and a drop. This is what our software identified. And this zone is already tested. And in the tested area, again we identified a 15-minute zone. See here we have a rally, base, drop. And within that, we have a 5-minute zone. You have a ERC candle here, base candle and a drop candle, follow through candles are there. There is a big move. You're supposed to draw zone like this, type 2 proximal entry or type 1 proximal entry, you're supposed to draw this. But why I have drawn like this, the reason is, see here, between this candle and this candle, there is a pro gap is there earlier. Maybe after that, that is filled, that is a different case. But there is a pro gap created. That means institutions still have the choice to place some hidden orders in this area. That's why, and moreover, the gap is very small and our risk doesn't increase, maybe slightly increase, but not significant. So that's why up to this gap area, we've drawn this zone. That is the reason behind this. Because order flow will be there. If order flow is there, within this area, again, the moment it comes, prices will go down. Same thing happened today also. See here, just entered into that pro gap area, whatever we have drawn within this. That is 5 minutes level area. If you consider this as a leg out, this is a ERC candle. I am considering this as a ERC candle. Because some people may say because it is having wicks and body is probably less than maybe 50% or maybe equivalent to 50%. But it is a ERC candle. ERC candle having more than 30% body, definitely we can consider as a leg out candle. That is what I explained earlier. And moreover, the body came out of this zone and there is a follow through candles and there is a big move also happened from here. See, ultimately what we should identify, you should have confidence that there is a liquidity in this area. Because liquidity is there, see how the rejections are coming today. It's a very strong rejection. You can take one more trade in this zone because just before entering into this zone. Next time, how do you draw the zone like this? Purely type proximal. Now what we did, the pro gap area, now today already tested. Who knows, maybe second time also from here only again the rejection will come. Because the small gap area, institutions definitely they keep more hidden orders there. And this is the 15 minutes target. And that way it reached. And that is the way it has given a profit around, I forgot, I kept the value in our Telegram group today. It's around 10,000, I think around 10,000 plus profit it has given. But it is that profit was around 5.6%, if I'm not wrong, return on the investment. The reason is the cost of the future for this stock is around 2,20,000 rupees is there. So that is the reason why our ROI is reduced for this. But anyway, 5.6 is close to 6.1%, a difference of 0.5%. So this is the only one trade got executed today. So this is about the high liquidity zones generated in our yesterday's report and one trade we got. So in the next video, Maybe probably the late night I will be generating. And in that video, I will generate the stocks near demand and supply zones. And again, another video, I will generate the WIT and that is weekly income trade and monthly income trade, bullish and bearish trade setups. I will generate one more video. Probably by morning 4 o'clock or 5 o'clock, those videos will be available to you. So whichever you are having interest, you can plan on those, whether high liquidity zones or bullish or bearish trade setups. But please remember, your bullish and bearish trade setups, it takes some time to get into prices, get into that zone. You have to understand that. High liquidity zones are stocks near the zones. They are very near to the zones. But your bullish trade setup, bearish trade setup, we don't know. They are near the zones or they are in the middle of the zones. It takes some time for you to reach into your zone. So you patiently you have to wait until prices are entering into that zone. So these points you have to understand when you are planning WIT trades and MIT trades. So this is about our today's analysis part. Let us meet in the next videos for generating the demand and supply zones. Thank you.